Alright, so blessed everybody, hoping all is great. Alright, so what we're going to talk about today is my A plus setup, what I look for inside the market. It is exactly the same thing that we talk about, but just a little bit more added steps. Now, we went over support and resistance. Everybody should already know what exactly support and resistance is, how do you find support and resistance, and everything about support and resistance. Now, we talk about the A plus setup and our entry point, why we look for these trades, why we wouldn't take a trade, and everything about the trade what we would be looking for and would not be looking for inside the market. But what I'm going to do is just run it across the screen just so we can read it all together. Let me pull it up. So this here is my trading plan on my trading guide is what I would say about the market. So my trading guide, first, I'd find the trend of the market on a weekly, 1 day, 4 hour time frame. What I mean by this, I would head to the weekly time frame, and if price is bearish on the weekly, okay, boom, I'd have mark on my journal. Prices, let's use GBP USD for example. Price is bearish on the weekly time frame for GBP USD. Price is bullish, bearish on the 1 day time frame for GBP USD. Price is bearish again on the 4 hour time frame for GBP USD. So I'd have in my journal that hey, price is bearish for all time frames. So this would give me a way clear indication on exactly what I'm looking for. So if price is bearish on all time frames, I'd automatically say in my head, okay, boom. Only now looking for sells inside this market. You understand? Second, after finding the direction of the market, find your support and your resistance, your AOIs, on the daily time frame or weekly time frame. Now, I see a lot of you guys have a lot of this problem because a lot of you guys try to find your support and resistance on a 15-minute or a 30-minute or a 1 hour. Now, if you're a scalper, that's completely cool and you can do what you need to do because you're a scalper. But for those of you that are day trading, if you're a day trader, you have to use the daily time frame or the weekly time frame because that's the time frames that you trade off. You understand? So whatever you do is make sure that hey, on the daily time frame, you have to make sure that your AOI is respected though. It just can't be just a random zone. No, price have to respect this area more than 3 times. But we can go over everything just so you guys can understand it. Make sure that the make sure 2 or more time frames match the direction that you're looking for. So a perfect example is, let's say if the daily was bullish, the 4 hour bullish, but the weekly time frame is bearish, then we'd have like, okay, we have a more bullish than bearish. But let's say if the weekly was bullish, the daily was bearish, and the 4 hour was bearish, then we'd be like, okay, price kind of bearish more than bullish right now. So we'd keep an indication that, okay, we know exactly what we're looking for inside this market. Third, we will wait for price to reach an area of interest and show you that price is respected. Respect this area and head in the direction you're predicting. Once price reaches your AOI, your area of interest, your support and your resistance, you have to wait for the clear indication that price is respecting this area before you just go ahead and take this trade. So let's say if price reach my resistance area, and as soon as price reach my resistance, you shouldn't automatically take a sell position. You should now say in your head, okay, boom, price reach my AOI, price reach my support or my resistance. All AOI means is area of interest. So as soon as price reach your AOI, now you drop to a 30-minute or 15-minute time frame and find where price consolidating. All you have to now do is put the consolidation box below the last low or the last high and wait for price to break through that completely bearish or bullishly. You understand? Like you have to wait for the clear indication. Don't be so rushy to hop inside of a trade. The important parts of trading, before you even think about it, think about your entry point, yo. What's the important part of trading is everything you do before you enter a market. Like for me this week, I realized that I was so focused on making $40,000 or $30,000 that I didn't even care if I entered a trade too early or too late. I just wanted to make $30,000 to $40,000. I already know that hey, I was $30,000 or $40,000 away from my goal, and I just wanted to reach it. And because I was focused on that, it messed me up psychologically. Even though I profit on my trades, it still messed me up psychologically because I was so focused on the money. So don't make the same mistake that I did. Fourth, my entry signal is finding my consolidation area on the 30-minute to 1 hour time frame. Waiting for price to break and close below. So you can't just wait for price to break outside and then you just enter it. No, you have to wait for price to break outside your consolidation box, wait for the candlestick to close on a 30-minute or 1 hour time frame, and then you enter into the market. You understand? But the reason I use 30-minute and the 1 hour is because I'm a day trader. If you're a scalper, that's completely understandable. You understand? If you use a 5-minute or 1 minute, it's the exact same concept but just a different time frame. And just a couple of pointers. My minimum RR is a 1 to 2. I used to push a 1 to 3 minimum, but I realized that, hey, I used to miss it on a lot of trades, running a 1 to 3 risk to reward ratio. So now I push for a 1 to 2. My maximum risk per trade is 2% per trade. So let's say if I have a $200,000 account, I know within myself that, hey, I'm comfortable risking around $4,000 per trade. Why? I risk, if I only take A plus setups, why do I only risk 2%? Because I know within myself that, hey, even though everything about this trade might be right, a major news might come out and price might wake me out. That's stuff that we can't control in the market. So because price might hit my stop loss, because price might do something really, really silly, I still have to be prepared for really bad things to happen in the market. So what I do, I tell myself that, hey, I'm willing to lose $4,000 a trade. I'm willing to lose 2% this trade. So I risk around 2%. You understand? And the major thing, is setting and forgetting. One of the major things I say setting and forgetting is because I learned one of those words from the members earlier today. You can't babysit the trade, You can't just look at the markets 24/7. For one, you can get annoyed at looking at the markets, and you can almost get aggravating just looking at the markets all day. Every 2 seconds, you're just looking at your phone. I wonder if I up in profit. Damn, I down $500. Should I close this trade out? No, you already told yourself that, hey, I was risking 2% this trade, so let your trade play out. Price can now only do two things. Price can either hit your take profit or hit your stop loss. But what I would tell you to do is, let's say if you have your take profit 1, your take profit 2, you should put around alerts around your take profit 1 and your take profit 2, just so you can tell yourself that, hey, I could be notified when price reaches profit, so I could either A, move my stop loss to break even, or B, close partial of my trades, close partially your profits. You understand? So now what we're going to do is just look at the charts. Let me take this off the screen. Perfect. So a perfect example is right here for USD JPY. Let's break this trade down completely. Let's take it off. Let's break it down. Let's remove every single thing off this trade. Why did we enter the trade for USD JPY? Why wouldn't we not enter the trade for USD JPY? All these things I want to run over. First, as soon as price reach our and break below our support area, let's wait. As soon as price break below our support area, we get the clear indication for one on the weekly time frame. Let's wait. On the weekly time frame, price is completely bullish. So all we have to do now is type right here. Weekly bullish. Let's put this here. Let's move down to the daily time frame. Let's grab this. I mean bearish, not bullish. My apologies. For those who don't know, bearish means down and bullish means up. So on the weekly time frame, price is completely bearish. On the daily time frame, price is also completely bearish. So we have daily bearish as well. And then on the 4-hour time frame, let's check it out to see what price is. On the 4-hour time frame, price is also bearish on the 4-hour time frame. So let's grab this here. So if price is bearish on the weekly, on the daily, and on the 4-hour time frame, you shouldn't be looking for any buy positions just because price reaches support. No, you have to follow market structure. You have to follow the trend of the market. If the trend of the market is telling you that, hey, I'm going down, you should go with the trend of the market. You should go with, let's write this here. You can always go with the trend of the market. You don't ever go against the market because the banks move the markets. We don't move the markets with our $300 or $400 or $20,000 that we take out the markets. If the banks is trying to push the market down, you ride the wave with the banks. You don't ever go against the banks. You go with the trend of the market. So if the market is bearish on the weekly, bearish on the daily, and bearish on the 4-hour, you automatically now look for your sell positions inside the market. Now, because price ended up breaking past our support area, what we now do is first find our AOI. Our AOI is our area of interest. Where would we say price would have to retest for us to now get inside this market? Boom, price right past our support area. What I'm now looking for in this market is for price to generally retest this now resistance area, because anything above the market is resistance and anything below the market is support. So because price now broken past my old support and becomes my new resistance, what I'm waiting for in this market now is for price to retest and then continue to the downside. So what I would now do is head to my 4-hour time frame. Let's just wait it out. All I'm waiting for is just a nice retest inside this market now. Boom. So as soon as price end up retesting your support area, all you gotta now do is head to the 30-minute time frame, find your consolidation box. All the consolidation box is market breaking up, market structure on a lower time frame. So you could have your consolidation box here. You could have your consolidation box right below the last low here and also here. It's completely up to you if you want to be completely risky or if you don't want to be as risky. Boom. Okay. Boom. Well, that was close. Boom. So as soon as price end up breaking past my consolidation box and closing on the 30-minute time frame, all I would now do is my stop loss. And because we swing traders inside this market, we have to find our stop loss and take profit on the daily or weekly time frame. You shouldn't be using the 4-hour time frame to find your support or your resistance. I mean, all your take profit levels. But this trade here is a beautiful partner. I ain't used to using a small laptop. I just normally use the monitor. But let's just now let this trade run and just let's see what market does. Oh, so as soon as price hit your take profit, don't be greedy, yo. Take your profits out. You have to always remember, let's say if you made $10,000, $5,000 in this trade, it probably took you around 2 to 3 days to take profit on this trade, or you probably might even hold it on the weekend. Yo, if you never made $10,000, $5,000 in a single day or in a single week, and you make $10,000 or $5,000 in the market, you should not be greedy to the point that you don't want to take profit because you want to make $7,000 or you want to make $8,000. That ain't how you're supposed to depend on where you should take profit in the market. Where you should depend to take profit in the market is, for one, if you tell yourself, hey, if price reach my take profit, I'm going to close. You have to follow your rules. You understand? You have to always follow your rules. If price showing you that, hey, price is about to reverse, let's say if price end up reaching here and price started to create it now higher highs in the market, closing my profit. I don't care if I up $3,000 or $2,000 or $1,000. Yo, price is telling me that prices are about to reverse to the opposite direction. Learn to take profit. You have to learn to take profit. If you don't take profit, and as long as that money floated, you could be up $10,000 and the $10,000 could go to negative 500. As long as you don't close profit, that money ain't yours. Till you close profit, that money is not yours. So what I always tell everybody to do is to close your profits. Take your profits. Remember, I keep on saying this. Take your profits out. Take your profits out the market. Understand? So that's all I generally wanted to show you guys today. But what I'm going to do is try to pull this up at least one more time just so you can see it. Alright, so what I'm going to do is attach. Let me take this off. Don't worry about that. Alright, so what I'm going to do after this is the picture underneath this video. I can send the rules and trading guidelines that I do have for my trading plan on what I do look for inside the markets, what I don't look for inside the markets, and just so you guys can read it and write it in your own journal. God bless everybody. Hope everybody have a good day.